In this video, the CoinGecko Q2 report for 2023, we're going to look at how crypto has performed over the last quarter, including price action of Bitcoin, ETH, a lot of other tokens as well. And I want to look at some of my research with this as well to understand where we are in the cycle. Should you be buying here? 30K seems to be holding a little bit weak now, but we're going to go through this report and see exactly how the industry is faring. I'll leave timestamps below. CoinGecko firstly come to the entirety of crypto and how it's performed. It's basically gone mostly nowhere in the last quarter, but this year has been extremely good performance. So started the year at 0.8 trillion, now at 1.2 trillion. And I want to highlight basically a mini economic cycle within the last 2 quarters. So right here, what we had was a banking crisis, the actual banking crisis in the States. And during crises, what happens is assets get sold off for dollars because uncertainty, people don't know what's happening. And so assets like Bitcoin, because it's so easily sold in any amount that you want, assets like that get sold off for dollars because dollars is what really people need to pay their debts. And so with uncertainty comes a sell-off in assets. However, what usually comes after that uncertainty is intervention by central banks or governments. And that's what we saw here, and assets rise back up again. So I can see this playing out in the longer term as well. For example, right now, economic growth is stalling, and I don't think that a recession is really going to force asset prices that much lower. However, a financial crisis could. If the recession really, keeps snowballing and a financial crisis kind of gets bigger, then what we could see is a lot of uncertainty again and a potential sell-off. However, after these sell-offs comes the government intervention. And so Bitcoin is just there long-term to protect against that. That's what I saw here. And that's what I basically see playing out through every larger cycle as well. Where are we in the Bitcoin cycle? In my opinion, we are in the accumulation phase before the halving. Every single previous cycle has been exactly the same. Maybe this one's different, but I'm of the opinion that it's going to be more or less of the same thing. So an accumulation year in yellow, which is before the halving. Halving happens at some point after that, you get a new all-time high. I do expect this to occur. I don't know the timing, but we've got essentially the world's biggest financial institutions bringing ETFs on. They have demand from their customers who want to buy this. When you have those ETFs, people can just dollar cost average into BTC in their 401k or their IRA or anything like that very easily. People demand this. There is demand for Bitcoin. And so we came down to the regression channel, literally bounced directly off it and just went straight up to the top end of what I would consider the price for this part of the cycle. So still accumulating. It is at the bottom end of the cycle. And so that is the time when you accumulate, in my opinion. Maybe I'm wrong, but who knows? What we can see here, Bitcoin dominance continues to climb. So at this part of the cycle, again, risk is still fairly cheap. And so Bitcoin just starting to recover and go, into its accumulation phase is going to be very strong throughout the, the halving cycle as well. Bitcoin tends to be extremely strong because this is the part of the growth phase of its cycle. So what we can see, I think here is Bitcoin dominance, just growing a little bit. Now with the very, very good court ruling from the courts in the States against the SEC, we saw a little bit of a, sell-off in Bitcoin dominance here, but still Bitcoin very, very strong in dominance terms. I do suspect that over time, Bitcoin dominance will potentially fall simply because there's going to be so many different crypto assets, including tokenized stocks and everything else. Is that going to be within the index? Maybe, maybe not. But Bitcoin is going to be extremely dominant, in my opinion, for the long term. The index is a little bit of a kind of smoke and mirrors. It doesn't really mean anything in my opinion, but Bitcoin, the dominant asset, I don't really see much changing. I think ETH is going to be up there, but I think Bitcoin overall as just world money probably has a much higher individual valuation than most other things. Now, in terms of performance here versus all of the other coins, again, this has changed recently with the SEC, basically getting defeated in court. But again, what we've seen is even with, a sell-off in risk, you've seen Bitcoin and ETH really kind of outperforming. And the story of this bear market has been Bitcoin and ETH essentially just, holding a lot of value in the terms of other altcoins. So if you're an altcoin investor, you can really, you want to look at your performance, not against dollars. You want to look at the performance against Bitcoin and ETH. Because if the performance is not good versus Bitcoin and ETH, then you're actually losing, even if you're gaining in dollar terms, because Bitcoin and ETH are much lower risk, if you were to say that. So your returns have to be risk adjusted to those. So everything, when you're looking on TradingView, you actually want to be looking against your token versus something else. So XRP, Bitcoin, instead of looking at XRP and saying, wow, it's up 70% over the last few weeks, let's look at XRP in Bitcoin terms, over an investment time horizon, which is maybe a few years. You can see it's, it spiked up a couple of times, but it hasn't gone anywhere, and it's been, giving up a lot of value over the last few years since 2018. Now that's because of the court case as well. So has it bottomed? Is it going to continually kind of, get valuation away from Bitcoin, or is Bitcoin just going to stay strong? Well, if they're going to perform the exact same, you'd rather Bitcoin because that has lower risk and it has a better risk adjusted return. So every return that you get should be valued in Bitcoin and ETH terms. Bitcoin and ETH kind of outperforming, as you can see here. This as well, what we can see is the total crypto cap in green, Bitcoin market cap in yellow, and the S&P 500. Why invest in Bitcoin and ETH when the S&P is just literally grinding to all-time highs yet again? Well, they have more volatility and they underperform in bear markets, outperform in bull markets. And so, yeah, maybe you don't need 100% in Bitcoin. You can have some in S&P, some in NASDAQ, some in Bitcoin, because they do actually provide different returns. I'll show you exactly the returns that they provide in a second. I've got nothing against the S&P, got nothing against the NASDAQ, but it's just that it's very clear, the data shows that Bitcoin, if you actually can hold it for longer and hold it throughout the volatility, just returns higher amounts. And so that's what I want to be in, because I have that time horizon. Correlation between S&P and Bitcoin was moderately negative. In my opinion, there's no real correlation here between S&P and Bitcoin. They have negative sometimes, positive sometimes, and so there's no real correlation apart from that, the currency is being debased, and so they're both going up in value. But what I want to highlight here is, higher lows over time, pretty much for all markets, right? S&P as well, higher lows over time. So looks like an uptrend for me in financial markets. Maybe that has to do with dollar weakness now as the dollar is getting weaker. But as we can see, risk is coming back into the markets and assets are actually going into uptrends, at least what we can see here. I want to jump in here because I am updating the crypto investor course over the next few weeks. If you have it already, then this will be coming free for you. 5, 6, 7 videos about how the cycle is turning out. We have the Bitcoin halving coming up, super important. Macro is changing and Bitcoin and crypto are starting to outperform everything else. It's a really important time. So I want to just give you the data there, tell you what I'm doing with my portfolio. If you want to check out the crypto investor course, link down below. Very difficult to be negative on Bitcoin performance over the next few years. Obviously, we don't know how it's going to grow, the extent to which it's going to grow, but just considering the fundamentals here, the micro aspects of Bitcoin. So the ETF applications over the next, let's say 12 months, you've got the ETF applications and the Bitcoin halving. I mean, those are just fundamentally the best things that could occur for BTC. Now, within that, I think there's going to be a ton of noise. Now, the next ETF application is 13th of August. I'll talk about that in a second. That is a date to watch out for. So I'll talk about that in a second. But what we can see here, just analysis I did for the video. Now, a lot is made of Bitcoin being up, 80% this year or whatever. And then detractors will say, well, it's, it went down 80% from the top and it's still down. You're well down if you bought at the top. How many people actually invest a lump sum at one occasion, which is at the top of the market? Maybe some people do. The majority of people dollar cost average. So they put a percentage of their paycheck into some investment or a group of investments over time. If you dollar cost averaged these three assets over the last 3 years, so that's throughout the bull cycle when you were paying top dollar, all-time highs, and then you were buying some lower, the S&P returned you 7% for your dollar cost averaging. The NASDAQ returned you 19% and Bitcoin returned you 22%. Bitcoin has outperformed the other investments. Now, with that, you get more volatility as well. So I understand if you're 60 years old, maybe Bitcoin isn't for you. You just don't really want the volatility. That makes a ton of sense. If you're young and you really don't need the money, then you're just getting better returns from Bitcoin, at least over the last 3 years. And we are still within the bottom part of the cycle. And so what is that going to be? When we get another, up part of the cycle, Bitcoin is expected to outperform. So what is this going to turn into? I think it's clear. You've seen all the data over the past 10 years. The best performing asset on earth is Bitcoin. And just that's as simple as that. That is the truth. That is the actual facts of the situation. So Bitcoin price versus trading volume, the price return was 7% in the quarter. I think we're kind of at the top of the range of where we are right now, where, we've literally just gone up in a straight line from the regression line up to what I would consider is technically a massive area of resistance. So we've just performed extremely well. Are we going to consolidate? Are we going to kind of grind sideways? I guess this depends on ETF application news and everything like that. We just went to 30, which is for me the kind of the best result. And so now we're just kind of waiting for maybe ETF news or the halving or more economic data. So it's been a very good performance, and I don't see where we would go from here. You need a lot more fresh money to come into Bitcoin to really push it to new highs. And that doesn't usually come until after the halving and those ETFs if they are fresh money. But what we can see is, higher lows over time, which is always a good sign through two quarters. Hash rate, 22% is insane. Hash rate is an all-time high. More people are coming on to mine BTC, and the halving in April 2024. Let's look at halvings previously. Each of the previous halvings are in blue here. So, in 2013, you had, just an all-time high after the halving, and another all-time high after the halving, and another all-time high after the halving. What we're going to get here, halvings, halving is a great narrative for trading, and you need narratives to really, get speculative interest, and you need speculative interest to push to new highs. But the ETFs are really important, actual fresh money into BTC as well. So I don't think the timing of these is a coincidence. They know the halving's coming and it's a great narrative to push. It's your job to make sure that your positions are in place before that. But obviously with the halving, people are just trying to get as much BTC as possible. 22% hash rate increase. Here we can see the performance of BTC over this year, right? So over longer time frames, you just want to be in assets that outperform. So what we can see is the Q1 2023 return was 72%, right? So after such a big move, you expect a consolidation or some profit taking or some sort of pullback, right? And so it's still up 7%. S&P and NASDAQ actually outperformed BTC over this quarter, but of course they were, way underperforming in the first quarter. So Bitcoin for this year, I assume is going to outperform them given, without any, crazy news going on. But look what we can see. We see crude oil down. Remember when we were told that there was going to be a commodity super cycle and that everything was going to underperform commodities? That's just not the way it's gone. Crude oil down 12%. Gold actually down this quarter, even though it was up 8% here. But you can see the best performing asset out of all of these in this year is without a doubt BTC. But in this quarter, actually, the NASDAQ was massive. So all of that talk about the tech trade is over, it's just complete nonsense. During both parts of the cycle, during the high growth phase and the low growth phase, what is going to outperform? It's the thing that is growing the most. If you have two assets, one is growing more than the other, then that's going to grow its valuation more than the other. And there are small parts of the cycle where different things outperform for those different reasons. So if you're looking at short-term trading, maybe oil outperforms. When Russia invaded, oil is going to outperform, and other commodities are going to outperform as those traders pile in. But that isn't secular investing. When you're investing, you actually just want to invest in the thing that's growing more. And so oil demand is not growing as fast as Bitcoin demand, right? Tech companies are growing their businesses faster than most other businesses. And so they're going to outperform over investment time horizons. And so you can be a speculator and trade, or you can just invest. And if you are investing, you actually want to invest in things that are growing the fastest. 13th of August is when the ARK Invest, which is this one, plus 21 shares Bitcoin ETF application, is going to be decided on by the SEC. Now, the SEC could either approve, deny, or just push this out. There was some speculation that maybe they were going to approve it right here in the 13th of August. I kind of doubt that now. They had a real egg on face from the XRP decision, and it just feels like Gary and the whole SEC has just decided that they just want to delay it for as long as possible. So the 13th of August, maybe they're going to push it back. If we get a good surprise, then I expect Bitcoin to just be bid up and just break through 30 resistance. Probably not, right? It's in the middle of August, kind of a weird time to make decisions like that. Maybe they're going to push it out for another, I think it's 30 or 90 days or something like that. However, it's really the tail end of this year and the start of next year where the decision deadlines are. So, I think the SEC has maybe 2 or 3 occasions where it can delay the decision, or if something's actually wrong, they can, of course, reject it. But it doesn't look like anything specifically wrong. And so all of these guys, they are actually going to have the final decision by spring next year. And that's just in line with the Bitcoin halving. So, just insane timing, obviously, because we could be getting the Bitcoin halving and ETF applications approved around the same time, which is, just crazy. Maybe it comes a bit earlier. That's all noise. Doesn't matter, right? BlackRock, Valkyrie, VanEck, Fidelity, they are applying and they will get approved at some point. This is going to happen. That's the signal. Everything else is noise. If we get FUD on the 13th of August, buy the FUD because we're in the part of the cycle and that's an opportunity in my opinion. Ethereum has remained extremely robust throughout the bear cycle and actually bottomed before Bitcoin. I believe this is because of the upgrades that they were doing with the Shanghai upgrade and the merge and everything else. The tokenomics just became a lot more sound and strong. But Ethereum is just such a large ecosystem as well that, it has a lot of value. And in Bitcoin terms, it's kind of gone sideways, which is, better than most would expect because usually within a bear market, you would think Bitcoin would outperform. It has a little bit, but not too much. You can see Ethereum's bear market performance here. It came down from what I would consider is, a bull market high and a very, very overbought. And it came down during the bear market. But unlike the previous cycle where it actually came down to the regression line here, it stopped at this midline. And that's obviously very strong price action despite the falling price, right? Because you've got the cycles playing out here and cycles of boom and bust and new highs and drawdowns. But the drawdown didn't come to this second line. It was actually quite strong. And what we've seen is it just bouncing off this second line and actually moving upwards, just grinding higher. Why is that? The tokenomics are more robust. Yes, it's not proof of work now. I guess the market doesn't really care about that. If the market did care about that, it would be lower and it isn't. So you just have to trade what actually is the truth and not what you think to be with proof of work versus proof of stake. It's very strong price action, right? So it bottomed, around June, July 22, it seems, and it's just been grinding higher since. In Bitcoin terms, what we can see here, since 21, it's kind of gone sideways, right? So it hasn't outperformed, it hasn't underperformed, it's just kind of in this range. So no real outperformance. You can see Bitcoin dominance rising since, Sep 2022, but it's in this box. You've got this entire wedge here, this kind of rising wedge, which is usually a bullish pattern. So a lot of traders are expecting some sort of breakout maybe in the bull market. Ethereum being a smaller asset in terms of just the dollar valuation could outperform BTC. As really long-term investors, maybe you're looking at, is Bitcoin more like gold? And so it's going to have that valuation, which is gold's 11 trillion, right? The nearest platform competitor as an equity, Apple 3 trillion, right? So gold's worth way more than any particular platform. Is ETH going to be valued as a platform or is it really genuinely a currency? Because if it is a currency, then I can see it going head to head with Bitcoin for a long time. Or is it going to be valued as a platform? That's still a kind of open question, in my opinion. But what we can see is just, a lot of strength from Ethereum here, 6% up in the quarter. You can just see higher lows over time, just grinding higher in terms of the performance. Now, the tokenomics are very cyclical because the burn, when a lot of people are using ETH gets burned. And so the supply decreases. That's obviously positive for ETH during bull markets, and during bear markets, not so great. However, we're kind of in a bear market now. Activity on the chain isn't what it was during the bull market. We're kind of in a bear market for on-chain usage, and we're still burning tons of tokens. So these tokens, the burn rate for me during a bull market is just going to get pretty insane, which is going to have a severely restrictive effect on the tokens, right? So fewer tokens, same dollar valuation, each token worth more money. This is, during a bull market, this could get a little bit crazy. I don't know how this is going to play out. You could get a huge rise in the price of Ethereum, but, then a lot of selling and a lot of volatility as well. So there's still some risk here in terms of how the price is going to behave, because I think we've never seen this before. However, what is Ethereum? what do people want to do with Ethereum? They want to exchange financial assets like dollars or other investments. They want to transfer those assets around to each other. They want to sell in and out and use dollars. And they want to obviously use a wallet just to make things easy. You can see Arbitrum here. Arbitrum is the first time that a layer 2 is in the top 5. So what is Ethereum now? It's just a clearing and settlement platform for financial assets. So you can issue assets, you can trade them, you can send them around. And then of course, layer 2s consume gas on ETH as well. Layer 2s are what is going to scale out the Ethereum ecosystem to a lot more users, right? You can't pay $5 or $3 and then during a bull market, $50 to send ETH around. It's just impossible. So layer 2s right here are consuming gas on ETH, which is positive for ETH, but then you get more users on those layer 2s. And so ETH has basically launched its scaling in a bear market. And I just think that's super bullish for the next bull market. We can look here at ETH's dominance as well. It just is the most dominant platform. How is it going to be overtaken by another platform? Because there are other platforms that I think can be very successful as well. Other blockchains that have strong communities, a strong use case, a different use case. You know, ETH is good at a lot of things, but is actually bad at some others. Maybe other chains can, you know, carve out a niche for themselves. So I don't think it's, you know, one versus the other, but obviously you want to be invested in the thing that's, I guess, the strongest and the most reliable as an investor. And that's where you can put more money to work. And so Ethereum, you know, 70% of dominance is ETH, right? And what we can see down at the bottom is it's not just 70% of ETH. You can see Optimism is starting to take out some market share. Arbitrum is starting to take out some market share. Then you have Polygon as well, which has some market share. Optimism, Arbitrum, and Polygon are layer 2s on ETH. So if they're successful, ETH is successful. The way, you know, the way this settlements layer works with ETH is that it just is the trusted industry standard settlement layer for issuing blockchain assets, crypto assets. If you look at BlackRock and some of the others, seems like they've kind of chosen ETH as well, right? If BlackRock is invested in Coinbase, BlackRock is invested in Circle, Coinbase and Circle both developing on ETH. So unless that changes, I can't see that the bulk of the industry is going anywhere else other than ETH, right? Now, ETH is, let's say, credibly neutral for the most part. And so that's important as well, because if you look at Binance Smart Chain, who is I would say a direct competitor to Coinbase, they're both using ETH. If you look at yesterday's video, I made a video about L2s on ETH. You have Coinbase and Binance both building out layer 2s on Ethereum using the Optimism stack. That's important because ETH is, for the most part, credibly neutral. It means that competitors can both use it. And so it's not ETH versus, it's just ETH as the layer with the competition on top. And I think that just makes, you know, ETH incredibly strong and robust as an investment. What I also looked at in that layer 2 video towards the end of the video is the outperformance of other altcoins in ETH terms, and smaller coins can outperform during bull markets, especially towards the latter stages where risk is, you know, being taken and risk becomes more overpriced. So towards the top of a bull market, risk becomes very expensive. Therefore, the riskiest things have very high returns, you know, but they return that for a very short period and then obviously come down the most as well. So if you're looking to make higher returns, you really have to study which coins are going to outperform. And I just don't know which ones. There's going to be some maybe L2s and some other alt L1s that have been really beaten down that launch a product or something happens and they're going to outperform for a short period. Whether that's DeFi tokens like this, because so many new tokens are coming up. I think the XRP case was very important as well, because the XRP case says that crypto coins are not securities by default. You can take a coin and you can securitize it by wrapping it up and selling it to someone. But if it's just a coin on a blockchain, it is not a security by default. And that kind of opens the door again to innovation and people being a little bit more confident to invest, kind of bring these things to market. And so there's going to be some outperformance either from DeFi tokens or alternative layer ones or something else during the bull market. I don't think that's now. We're not in the bull market now. We're in a recovery phase before the bull. During the peak of the bull market, there's going to be outperformance from smaller coins. Whether you want to try and catch that or even have the time or effort needed to actually catch that is obviously up to the individual investor. But the industry is going to start growing again, I believe. And so you can see all of this, these new coins coming up and DeFi primitives being built. So the building is going on in the background. Of course, it's all going to be forgotten about and not invested in until the bull market, where people start just overpaying for all this stuff again. So again, the cycle, you can choose to take advantage of it in many different ways. For me, just being consistent and dollar cost averaging during the low times is enough, I think, in terms of how the industry is growing.